The trillion-dollar crypto market has witnessed sharp selling in the last week, with investors losing billions of dollars. Major currencies such as Bitcoin, Ethereum, Solana, Luna, Dogecoin, and Shiba Inu crashed. But the devil came for Terra's Luna and their stablecoin UST because they are the worst hit tokens. In 24 hours, the price of Luna declined more than 99% to hit an all-time low of $0 per dollar. It is currently trading at $0.1 apiece, while UST, which is an algorithmic stablecoin, is currently trading at $0.18. Today, I'm going to dig into why Terra Luna and UST crashed, why Luna's market cap dropped from above $40 billion to just $500 million, and what the future holds. Also, if you enjoy crypto content, consider subscribing or liking the video. I spend a lot of time doing research like this, and only a small percentage of my viewers are subscribed. It's free, and you can always unsubscribe. Let's start with the basics. So Terra UST is a stable coin. It is meant to be pegged to the US dollar. This is done through arbitrage trading, in which investors exchange UST for Luna or vice versa, in order to keep the price at $1. Normally, this works. It's made a few mistakes in the past, but nothing too serious. Every time there has been a blunder, it has been due to the market tanking or something similar. However, these things are designed to withstand market shocks, so it is usually fine. As you're probably aware, UST is presently trading for much less than $1. Right now, it's at $0.18. The worst aspect is that people buy and invest in UST and other stablecoins to protect themselves from volatility and risk. When you want to be safe, you put your money into a stable coin. It is meant to be a safe option. Many people lost their life savings and their hope because of the UST crash. One investor confessed on the Terra Luna subreddit that I have lost over $450,000. I cannot pay the bank, I will lose my home soon, I'll become homeless. Suicide is the only way out for me. This is truly heartbreaking. So how did all this happen? So at the beginning of the month, Anchor Protocol, the world's first popular lending platform, changed their rate structure, and you could lend out the UST stablecoin for roughly 20% API. First of all, these rates are crazy. The problem is that this was intended to be introductory pricing to entice people to join and develop interest around this ecosystem. Later, rates would be reduced. They were wasting a lot of money, and this couldn't continue forever, which is perfectly fine. If cash ran out, rates would just drop, but your deposit would be safe. A new rate structure was implemented in early May, making rates more changeable based on demand. Rates were predicted to fall by roughly 1.5% for a few months until that stability was found under that protocol, and they weren't wasting as much money. So this began with the idea that those who had money placed on this Anchor Protocol receiving interest would leave. Well, some would, and in exchange would spend less money. The exact opposite occurred. After the move, deposits reached a record high of roughly $18 billion in early May. But once again, it was not the end of the world. However, we are currently in a volatile market. Stocks, cryptos, and everything else is falling. Everything to do with investment is riddled with anxiety. People in the general market began to sell cryptos, including Luna, the cryptocurrency that powers UST. Investors were concerned about Luna's capacity to back the value of this increasingly huge UST token as its price fell. It's one of the top 10 tokens. Now, some investors started selling their UST, putting a lot of downward pressure on UST, and went down in value. This knocked it off the $1 mark. So it went from $1 to roughly $0.99 around May 7th. This, once again, was not the end of the world. Coins that are stable fluctuate. Even the USDT swings a little. UST was recently trading at $1.01. No one raised an eyebrow. It was completely alright. So things were a little delicate, but so is the market as a whole. So this didn't appear to be a major problem. That is until the Fed announced the interest rate hike. As a result, stocks and cryptocurrency started to drop immediately. People concerned about further market losses began selling, including the Luna token and UST. So this is how Luna's value started decreasing. Remember, UST is backed by Luna, so people became increasingly concerned that the value of this stablecoin was decreasing. That caused even more sell-offs, and you can see how these sell-offs have a negative impact on the economy. UST fell further off its $1 peg, selling off more and more because now people were scared. It hit 98 cents. People were like, we can't deal with this anymore. You can see that negative effect compounding. We can see the market cap of UST dropping dramatically right at this time. This is where prices begin to absolutely freefall. It was an absolutely terrifying time. This happened right in front of our eyes. Luna dropped by half in what seemed like minutes. The price of UST, which is intended to be $1, fell to 80 cents, then 70 cents, then 60 cents. Luna dropped 70% and then some more. Surprisingly, it didn't go to zero the first night, but I was still looking at larger losses than I've personally ever seen before. But things seem to be healing up, so people started hanging tight just a little while longer to see where things trend. That was a mistake. Late on the 10th, prices began to tank further and further, eventually hitting around 20 cents for UST. $1 now worth 20 cents. Sure, you'd be irritated if you bought a volatile asset and it dropped 50%, but when you buy something that is meant to be a safe bet, well, reasonably safe, it's not entirely risk-free. When it drops, you just feel cheated, and I'm sure there are many people who feel like this. You think you should have done something different, but I really don't think anyone who lost on UST should blame themselves. This was a black swan event. This is the Lehman Brothers collapse of crypto. Now, I'm going to talk about what the future may bring, but first, I'd like to address the rumors that this could be a planned attack. We don't have proof of this, but I believe it's essential to know what's being said. So market conditions worsened the entire problem. However, there are suspicions that it was driven by BlackRock and Citadel. They borrowed 100,000 Bitcoin from Gemini, and according to legend, converted 25% of that into UST. They then reached out to Do Kwon, the founder of Terra, saying that they wanted to buy a large chunk of UST and would sell Bitcoin at a discount in order to do so. And they wanted to do it straight to avoid causing too much damage to UST. He allegedly took the bait, reducing the supply of accessible UST. This, once again, has not been confirmed. The Bitcoin was then sold by BlackRock and Citadel in UST that they held, causing both markets to fall sharply at the same time, creating this panic, or at least boosting a panic that was happening. They then bought back their Bitcoin for a cheaper price and made a handsome profit on the loan. The unfortunate part is that if this is true, it is completely legal. They were merely taking advantage of a market loophole. It's unfortunate, but it's a poor market. You don't have much to say or do. So what now? Well, I want to draw your attention to two major concerns. Terra is voting to change the UST algorithm to make the $1 peg method function faster, bringing the price back to normal sooner. This is a positive thing, but it will come at the sacrifice of Luna. Do Kwon, who founded Terra, tweeted, "I understand the last 72 hours have been extremely tough on all of you. Know that I am resolved to work with every one of you to weather this crisis, and we will build our way out of this." Mr. Kwon has revealed a revival plan for the Terra ecosystem. Luna saw mini recovery immediately and surged by over 3,000% in 24 hours. Even with this change, I expect a lot more volatility in UST before it is corrected. Even if it can be repaired, the worry is not over if you still hold UST. Of course, none of this is financial advice. Second, this is seriously damaging to the entire cryptocurrency market. For the last year or so, regulators have been keeping a careful check on both crypto loans and stablecoins. Binance, the largest cryptocurrency exchange by trading volume, halted the trading of Luna and Terra on Thursday. The OKX exchange, one of the top 10 by volume, took the same action shortly afterward. The FTX exchange and other smaller exchanges continued to list and trade the Luna and UST tokens. I think this is the final straw for both tokens. This is exactly why markets are regulated. And this is not the first time such a thing has happened. If you can recall the bank runs of Black Wednesday, the 2008 financial crisis, it was exactly the same. People have fun, make profits, markets heat up, and ultimately the show ends. Then regulators must act to try to prevent it from happening again. But there will always be a new market that emerges and the same thing will occur. The only thing we can do now is to learn from this experience. Did you lose any money due to this Luna UST crash? Did BlackRock and Citadel take advantage of a market weakness? Let me know in the comments below. And if you learned something new from this clip, click the subscribe button and hit the bell icon to be the first to see our new videos. I make deep dives like this every week where I uncover the secrets of money and business.